I'm Professor Philip Wolitzer of Long Island University. All of us in life, hopefully we start to invest. And we start hearing about annual reports, financial statements, statements we mentioned here, balance sheet, income statement. I'm going to add one more to you, because bear in mind, I mentioned that most accounts, most bookkeeping is done on the accrual basis. If you're on the accrual basis, people started to say, okay, that's fine. But cash is so important these days, really. When you stop to think about it, a lot of our problems have come about because the debtor didn't have cash, the creditor didn't have cash. The liquidity situation in our economy has become so important that we now have a third statement called the Statement of Cash Flows. So just to reiterate, an annual report, in other words, if you buy stock in a corporation, it's on the stock exchange, okay? Well, actually, they don't have to be in the stock exchange as long as they're a public corporation and they've issued stock. They have to give you an annual report, which consists of a balance sheet, the statement of financial condition, an income statement for the period ended, usually for the year ended, statement of cash flows, which is also for the period ended, usually for the year. The difference is these two, the balance sheet and the income statement, are on the accrual basis. The statement of cash flows is purely on the cash basis. Cash in, cash out, so that you have a rounded view of what the corporation is doing and how it's doing business. Surprisingly, sometimes, the effect of cash is so important that a lot of people pay more attention to the statement of cash flows than they do to the income statement. And I'll get into that later because of the way entries are made and so on. I can give you a terrific income statement with great net income, but if there's very little cash, they'll go broke very, very fast. Now, the annual report are these annual statements plus what we call the MD&A, which is Management Discussion and Analysis. That's prepared by management, precedes every annual report, and is supposed to contain every item of importance on a comparative basis according to the Securities and Exchange Commission. It's the SEC that tells every public corporation, here's the way you have to present it. And therefore, the MD&A, or Management's Discussion and Analysis, consists of all the points that the SEC thinks important. Unfortunately, sometimes it gets to be so long that you tend to kind of fluff it aside, but we really shouldn't, because it's supposed to contain just what it says, management, discussion, and analysis for the last period. And then it ends up with footnotes. Now, we live in a society where I'd like to say to you that ethically everything is done great, morally we do things the right way. We all have integrity, but alas and alack, such is not always the case. So, footnotes accompany all these statements. And the footnotes are supposed to explain anything that the statements don't tell you clearly. Unfortunately, there's a word called obfuscation, and basically what that means is that some corporations are not always forthright in being very transparent or clear. So you really have to dig in or have a professional accountant tell you what's going on. In addition, most good corporations will give you supplementary material. In other words, The balance sheet can become so complex that it needs supplements. Okay, those are supplementary schedules. The income statement also becomes so complex or lengthy that we set up supplementary schedules. Now that, in essence, is the annual report. And when you own stock in a corporation, you receive that each and every year. Just as an aside, the corporation has to send you that in any way you want. Online, written hard copy, through the mail, etc. However, the SEC, or Securities and Exchange Commission, requires each of these corporations to submit a 10K to them, separate and apart. The 10K has to incorporate the annual report together with more and more information. As a stockholder, and even if you're not a stockholder, most corporations will send it to you. The 10K is available, and it does give you a lot more information than the annual report. By the way, if you're not a stockholder, each of these, the annual report and or the 10K, is usually available online and open to anyone who wants to look at them, because the stockholders are always looking for publicity, more stockholders, etc. And besides which, creditors are always asking for information.